What's really happening in the silver market right now? Prices have seen an unprecedented rally in recent weeks, and today we're going to uncover the real story behind this movement. Welcome back to Asian Guy Analysis, where we bring you facts and research-based analysis only. No fake news, no investment advice, just pure market intelligence. In today's video, we're breaking down the current state of silver prices, the real drivers behind this movement, global market impacts, and what the data suggests we might see going forward. So make sure you watch until the end, because I'm going to cover every detail backed by data and facts. And if you're new here, hit that subscribe button. Let's dive in. First, let's talk about where we stand right now. According to Reuters and international spot market data, silver prices are trading at elevated levels. We've witnessed a sharp rally over recent sessions that is capturing significant attention in the precious metals market. Important clarification, I won't quote a specific price here because markets move in real time. But what we're analyzing are the trend patterns and movement dynamics. If we look at the last 6 months of data, silver has posted considerable gains. This isn't just a 1 or 2 day spike. We're seeing a sustained rally that's been building over multiple weeks. Market data shows trading volumes have increased substantially. When you see price movement accompanied by volume, it generally indicates genuine market interest rather than pure speculation. We're also seeing increased volatility in silver futures markets. The ATR, average true range, has expanded, which tells us that daily price swings are getting larger. So the question is, what's driving this rally? What factors are behind this movement? Let's break it down. The first, and perhaps most significant factor, strong investor demand and safe haven flows. We're in a period of global market uncertainty. When this happens, investors adopt a defensive approach. They increase allocation to safe haven assets in their portfolios. Both silver and gold are traditionally considered safe haven assets, but silver has a unique advantage. It's more accessible for retail investors due to lower price points compared to gold. Market research firms report increased allocations to precious metals. Institutional money managers are looking at precious metals for portfolio diversification. Geopolitical tensions and economic uncertainties have amplified this trend. Investors are asking themselves, if equity markets are volatile, if there's currency uncertainty, where's my capital safe? And historically, precious metals have played this role. Here's something concrete. Exchange traded fund data. According to market reports, we're seeing increased buying activity in silver-backed ETFs. This is significant because ETF flows often signal rising interest from both retail and institutional investors. When money flows into silver ETFs, it creates physical demand for silver, which supports prices. This isn't speculation. This is trackable data from ETF providers. We're also seeing an inverse correlation with the US dollar. When the dollar weakens, precious metals typically strengthen. Recent dollar movements have coincided with silver's rally. That's not coincidence, that's market mechanics. But remember, I'm analyzing market behavior based on data. This is not investment advice. Now let's move to the second major factor, industrial demand. Here's what makes silver unique. It's both a precious metal and an industrial metal. This dual nature creates multiple demand sources. One of the biggest industrial demand drivers right now is the clean energy sector, specifically solar panels. Silver is a critical component in photovoltaic cells, the cells that convert sunlight to electricity. According to the Silver Institute's research, each solar panel contains approximately 20 grams of silver. Global solar installations have been increasing year over year. Major economies are pushing renewable energy targets. This creates consistent industrial demand for physical silver. Silver has the highest electrical and thermal conductivity of all metals. This makes it indispensable in smartphones and tablets, computer components, 5G infrastructure, and automotive electronics. As technology advances and device production increases, so does silver demand. Electric vehicles use more silver than traditional cars. Why? Because of battery connections, electric motors, power electronics, and advanced safety systems. The EV market is growing exponentially. Major automakers are committing to electric transitions. This translates to increased silver consumption. Here's the critical analysis. We're seeing growing industrial demand while mine supply growth is relatively constrained. According to mining industry reports, new mine development takes years. Existing mines have production limitations. Recycling meets only a portion of demand. When demand outpaces supply growth, it creates upward pressure on prices. Basic economics. Post-pandemic, there's also increased focus on silver's antimicrobial properties. Medical devices, hospital equipment, and even textiles are using silver. This adds another demand layer. Let's talk about the technical side, what the charts and trading data are telling us. When we analyze technical indicators, RSI, Relative Strength Index, readings have been elevated. Moving averages show strong uptrend confirmation. Volume patterns support the price movement. Silver has broken through several key resistance levels. When prices break resistance with strong volume, it often triggers stop-loss orders from short sellers, momentum-based buying from algorithmic traders, and increased attention from technical traders. This creates what's called a momentum cascade, where technical buying reinforces fundamental buying. According to CFTC, commodity, futures trading commission, data, we can track positioning of large traders versus small traders. We can see changes in open interest. We can analyze commitment of traders reports. Recent data suggests increased net long positioning in silver futures. This indicates bullish sentiment among traders. The options market is also telling a story. Call option volumes have increased. Implied volatility has risen. The option skew suggests expectations of continued movement. There's been discussion in trading communities about short positioning in silver. When shorts are forced to cover positions due to rising prices, it can accelerate upward movement. Whether this is happening now or not, the positioning data is worth monitoring. Silver typically moves in correlation with gold, but with higher volatility, what traders call the gold-silver ratio. Recently, the gold-silver ratio has been narrowing. This suggests silver is outperforming gold on a relative basis. Historically, these ratio changes can persist for extended periods. Now, here's the critical part that you need to understand. The risks and cautionary factors. Analysts are cautioning that silver has moved up very quickly. After such rapid gains, markets can see short-term volatility. Some traders may lock in profits. Corrections are a normal part of any rally. Silver is known for high volatility. It can move up fast, but it can also correct fast. This is just the nature of the market, not a prediction, just historical behavior. Several macro factors could impact silver: Federal Reserve policy decisions, US dollar strength, interest rate movements, and global economic growth indicators. If prices stay elevated, more mining projects become economically viable. Increased recycling activity occurs. There's potential supply response over time. Market sentiment can change quickly. What drives buying today might reverse if risk appetite returns to equity markets, safe haven demand decreases, or economic outlook improves. Many silver traders use leverage through futures and options. Leverage amplifies both gains and losses. A leveraged market can move violently in both directions. I'm not saying the rally will end. I'm saying understand the full picture. Markets are never one-directional forever. So what does all this data suggest about the path forward? Short-term, volatility. Likely continues, potential consolidation after rapid gains. Medium-term, fundamental demand factors remain supportive. Long-term, industrial demand trends suggest sustained interest. Based on our research, here's what's worth monitoring. The US dollar index will be crucial. Inverse correlation suggests dollar direction impacts silver. Real yields, nominal rates minus inflation, historically correlate inversely with precious metals. Continue monitoring whether institutional and retail flows persist or reverse. Solar installation data, EV production numbers, technology sector health. Watch quarterly reports from major silver miners for supply trends. Any escalation or de-escalation in global tensions affects safe haven demand. The coming days and weeks will likely depend on investor sentiment persistence, broader global market conditions, whether industrial buyers, increased physical purchases, and technical chart patterns that develop. I want to be clear, no one can predict exact price movements. What we can do is analyze current data, understand driving factors, monitor key indicators, and stay informed with research. This is analysis, not fortune telling. So there you have it, a comprehensive research-based analysis of what's happening in the silver market right now. To summarize, we're seeing elevated prices driven by multiple factors. Safe haven demand from investors, strong industrial demand from clean energy and technology, technical momentum supporting the move, but also awareness of volatility risks. Remember, this is analysis for educational purposes. I don't provide investment advice. Always do your own research. And if you're making financial decisions, consult with licensed professionals. If you found this analysis valuable, hit that like button. Subscribe to Asian Guy Analysis for more research-based market intelligence. Drop a comment below. What's your take on the silver market? What should I analyze next? Thanks for watching, and I'll see you in the next video. Stay informed, stay analytical.